With me today, I have Gervais Williams, Head of Equities at Premier Miton and manager of a number of funds, including the Premier Miton UK Smaller Companies Fund and Premier Miton UK Microcap Trust. Hello, Gervais. Nice to see you again.
Hello, Lee. Nice to be here.
You mentioned the pandemic and we had the big crash in March. I was just wondering, has there been much portfolio churn, either the UK Smaller Companies Fund or Microcap Trust this year? And were you buying after the March crash?
Absolutely. What was unusual, actually, was that going down into the crash, we actually had a put option in both funds. Now, this is a FTSE 100 put option. It doesn't, I know we don't hold any FTSE 100 companies, but on the way up, we're not worried about whether they're correlated together. But on the way down, the great thing about a put option is that when markets come down, nearly everything comes down together, as we saw with 2008 and indeed the corona crisis. So from that point of view, what actually led to, we actually had more cash coming in. This put option actually rose in value. It allowed us to actually bring more cash in. It's slightly protected on the way down. It was only covering 25% probably of the fund, but most particularly, it brought more cash in. And so we had abnormal amounts of cash at the bottom to put into new holdings to get the recovery. And we were buying into companies, absolutely. Specifically, we bought into Synergen, for example, which is a company which is involved in helping people breathe when they've got viral loads in their chests. It uses quite an established technique, which is beta interferon, but not on the inhaled form. That's novel. And we were able, with our clients' capital, to fund the company. They've just done a COVID trial, and it was very, very helpful. They're now moving to phase 3. So that's brilliant. It's not just brilliant to invest in a company which is going to recover very nicely and it's generated abnormal amounts of cash going forward, but most particularly to do that right in the middle of a crisis when it might have been difficult for them generally to raise cash at other times was particularly attractive.
Okay, Gervais, I think for viewers, I'll just confirm that a put option is when you buy the right to sell, in this instance, the FTSE 100 at a particular level. So if the index falls, the value of your put option rises. So just to be clear. Now, looking ahead to 2021, just wondering really what are your top stock picks for the year ahead and why? What do you think is really going to do well next year?
Well, it's quite interesting, isn't it? Because if you look ahead going forward, we would argue that actually we're going through some of the risks are dropping away a little bit. First of all, we've got the question mark about whether we have a chaotic Brexit. Hopefully we'll know in the next few months, one way or another. Hopefully it won't be too chaotic, and that will be a big change to investor perception in the UK. The second feature is that although we get a recovery and there might be a real splurge of consumer spend, we still worry that in a way the full kind of momentum of the economy, world economy, will be still quite patchy as it has been for the last 10 years. So we still feel that actually, ultimately, you need to get involved in companies which are hopefully going to generate not just cash flow, but do it in a relatively resilient basis, not dependent on the economy at large. So a good example of that might be Randall & Quilter. Randall & Quilter is an existing company which is involved heavily in the Lloyd's market. The Lloyd's market, we think, will continue to be a successful market for insurance even beyond Brexit and anything which happens at the year end. So from that point of view, we've got a company which is a service-based business, which gives ordinary companies, new kind of insurance companies, access perhaps to the US market or perhaps the EU market outside of the UK. So from that point of view, they're taking an awful lot of new customers on. They've got a real momentum in terms of new insurance flow through their networks. They think that they'll generate substantial cash payback on that over the next few years. You're already in at a yield of 4%. But as that cash payback comes through, we can imagine that's going to drive it. Now, that's only, as a larger company, it doesn't go into the microcap fund, but it goes very much into the small cap fund. So there's an example of a company which might well be a recovery there. On the small cap fund, I mean, another example perhaps of one of our top holdings is MTI Wireless. MTI Wireless is a company which is based in Israel, but actually is a UK quoted company. It's been very good at generating cash over many years for 5G aerials, MTI Wireless aerials, but most particularly is also involved in irrigation. Both those businesses are going hammer and tongs at the moment. It's had a very strong recent trading result. It's generated cash. It's paying a dividend already, and we expect that dividend to grow. So those are just examples, but they're actually just loads of examples at the moment. It's a really a plentiful investment universe. And in that regard, I think the prospects for UK economy may not be that different from any other world economy. But I think the UK stock market, with its overlooked nature, with people perhaps moving away from NASDAQ, if it peaks out a bit, then we may see actually renewed interest in the UK. And I think the UK has a lot of opportunity to pick out individual stocks, some of the stocks you were talking about, penny stocks, which might then continue to perform very strongly going forward.
So you think value will sort of come back in 2021?
What I do think is actually that a lot of investors already have a lot of exposure to what I call high beta. These are stocks which have already performed very strongly. They've outperformed the rising market. They've generally had a bit of a techie bias in many cases. So all of these things have been very good. I think going forward, I think companies generating cash and cash immediately rather than future growth are probably going to be the ones which are going to be driving it. Now, are they value? I'm not sure. It's not just about value and growth. It's a bit more complicated than that. But if you generate loads of cash for your clients, if you generate loads of cash for your shareholders, then that ultimately will be reflected in good share price performance in our view.
And looking, and you've mentioned a couple of the themes for next year. So Brexit, and we'll be coming out hopefully the pandemic. But which sectors or investment themes do you expect will deliver outperformance for investors in 2021?
Well, I think looking at the Asian markets, I mean, they've had a good COVID crisis, really. They've been much more resilient. They've recovered quicker. We think with the recent trade agreement across the pan-European area, pan-Asian area, we think that's going to be a real driver of growth. So we think that there'll be surprisingly resilient growth coming from the Asian markets, and that's going to drive the prices of commodities. So we're going to see a lot of metal prices moving up. Maybe energy starts to move up. We might find that some of the bond yields start to back up because people are worried about inflation. And so some of the financials might start to do better. So those are the areas we're finding. But I think the true value of small quoted companies is that they're just so numerous across such a range of sectors. It's not just about whether you're in a financial sector or perhaps some kind of commodity company. There'll be individual stocks in all the different sectors which actually continue to generate lots of returns. So we think it'll still be quite a wide ranging. Miscellaneous, before it was banned as a sector, used to be my biggest sector in my portfolio, and I think miscellaneous will continue to be a big part going forward.
Great. Well, lots to look forward to in 2021, Gervais. Thank you very much for joining us today.
Thank you very much, Lee.